Swayam Prabha. Digital India. Educated India.
In the last class, we worked on budgets, various kinds of budgets, cash collection. We did some two numericals also, disbursements, as you can see on the screen, some income statement, balance sheet, and all those things. I'm going to continue to do one more numeric on the same budgets out there before we move into flexible budgets and variances, which becomes the last part of my cost accounting course. Now, there's one more problem out here to get this concept a little more clear. The following data relate to the operations of Shiloh Company, a wholesale distributor of consumer goods. This is the assets part of it, and the liabilities and capital part of it out there. They've given you gross margin, budgeted sales data they've given, and they've said sales are on cash and credit and so on and so forth out there. All those details are there. Now, what they've given, they've required compute the following schedule. They've given you what is called a schedule of cash collection. They want you to fill this. They've given you for April. They've given you merchandise budget. The same thing you got to fill. Look at cash disbursements. Look at what is called as the cash budget. Then look at what do you call it as the P&L and they complete cash budget. From the cash budget, after that, they want you to look at the P&L and the balance sheet. Now, let's try and see if we can. I have not read this whole thing. I will be reading as we go along. Let us take this and try and see if we can compute this part of it. I'm just going to copy this and paste it in the Excel sheet so that it becomes relatively easier for us when we sort of solve it. Now, let us look at the schedule of expected cash collections. For that, let's go back and read the problem. For cash collections, it says sales are 60% for cash, 40% for credit. Credit sales are collected in the month following the sale. The accounts receivable of 31st March are a result of the March credit sales out. So, collection. Now, if you look at cash sale, that is, if a month of April, 60,000 is the cash sale out here. And what percentage? 60% is for cash. So, if I look at 60,000 and then 60% is cash, and that is what 36,000, you basically had that figure out. And the accounts receivable of March, just 20,000, as you can see in the problem out there, that is also collected in the month of April. So, your total collection in the month of April is 56,000. Let's go to the month of May. In the month of May, what is the sale? My sale I can see is about 72,000 and it's about 60% is basically collected in the cash. I've got it. And then what is the credit sale I'm collecting? 40% of the sale of April, because it clearly says 40% is credit sale and the credit sale amount is collected in the following month out there, and that is what I am collecting out there. So, what is the total collection out here? Total collection in the month of May is 67,200. Let me move to June out here. What are the cash sales? What are the sales of June? Sales of June is about 90,000. 60% of it I will collect in the month of June. 40% of the sale of the month of May is what I am going to collect in June out there. So, my collection is, this is the collection out what I have. So, my collection at the end of the quarter is, this is the collection at the end of the quarter out there. I am sorry, 82,800 plus 67,200 plus 56,000. This is the total collection I have as of the quarter out there. Very simple and straight. Let us look at the next aspect. Let's look at the merchandise purchase budget out there. I'm going to cut and paste it out here the same way. Now let's read about the purchase part of it here. Each month's ending inventory should be equal to 80% of the following month's budgeted cost of goods sold. Now, first of all, we have to know what is the cost of goods sold. We will know what is the cost of goods sold because it says the gross margin is 25% of sales. That means 75% of it is the sale value is the cost of goods sold, and that is what you can see in this calculation also what they have mentioned out here in this particular case. They say April sales is 60,000. The cost of goods sold is 75% of 60,000, that is 45,000 is what they have basically arrived. Same way 72,000 is here for the month of May. You say 72,000 into 75% out there is basically the cost of goods sold, and that is where you had 54,000 only. Now let us look at June. What is the sale of June? Sale of June is 90,000 and 75% of it is the cost of goods sold, and 67,500 is the cost of goods sold out there. What is the desired ending inventory? Desired ending inventory is 80% of the following month's cost of goods sold. That is, if you look at this 43,200, it is 80% of 54,000. That is what they have also given out here, double star as you see. So, for the month of May, what is the cost of desired inventory? Desired inventory is, this is going to be, this into 0.8 is going to be the desired inventory. Sir, for the month of June, what are you going to do? No problem. I have the sales of July. Sales of July is given as 48,000. What is the cost of goods sold? 0.75, 75% of it. And what is it? 80% of it, I will have it as my ending inventory, and this is my desired ending inventory. What is the total need? Total need is this plus this is the total need every month, and then if I look at this plus this is the total need, and I have my beginning inventory. If I look at my out here, my inventory is 36,000 out here. This is the need, 88,200 is the need. I already have 36,000. I have to purchase only for 52,400. Whereas in this month, what is the beginning inventory? Beginning inventory is the ending inventory of the month of April. That is the beginning inventory out here. So, what is the required purchase? Required purchase is going to be, this is going to be the required purchase. I'm sorry, that's because of the star. That's because, so what is the required inventory? What is the required purchase? For the month of June, what is the ending inventory of May? That will be the beginning inventory. So, what is it? There is going to be the requirement for purchase out here. So, what is the total purchase required for the quarter? I will say this is the total purchases that I have to do for the quarter out there. I go further. I hope there is no question on this. Schedule of expected cash disbursement on merchandise budget. Now let's again take this. I'm again going to take this. I'm just going to fill this up here. Now let's go to the disbursements part of it. 1/2 of the month's inventory is paid for in the month of purchase. The other half is paid in the following month. The accounts payable of 31st March is a result of March inventory purchases. Now, inventory. What is the March purchase? What is the accounts payable as on the balance sheet out here? Accounts payable is 21,750. I pay off it. What is April purchase? 53,200. Half of it is what I pay. That is what it clearly says. 50% of it, 1/2 is paid in the month of purchase. Out here, 1/2 is paid in the month of purchase. The other half is paid in the following month. That is what you see, the other half being paid in the month of May. Now let us look at April payment out there. Now let us look at May. In May, I pay half of the purchase of April that I paid plus half of the purchase of May. This is the purchase of May. 50% of it I pay in the month of May out there. The other 50% I pay in the month of June is what I will pay. This is what it is. June, what will I pay? I will pay 50% of the purchase what I make in the month of June, I pay. So, what is the total disbursement I basically have? The total disbursement I basically have is this the thing, and then total disbursement I will have is this, and total disbursement for the quarter is so much is the total disbursement I have for the quarter. For merchandise only, I have not looked at the other monthly expenditure, please note. I have not looked at the other monthly expenditures, etc. so far, please note. All that we will look at when we do the cash budget as we go along in this particular case out there. When we do the cash budget, we will take up all those things. I move on further and then I say there is a complete the cash budget. We will take this. So, the next one we move to what is called as the cash budget out there. Let us look at the cash budget. I am just going to cut and paste it out here. We have pasted it out here for the quarter. So, cash budget, we will see what is you see beginning cash balance 8,000. We can actually see in the balance sheet out here, there is an opening cash of 8,000 out here, and that is exactly what you see there. Collection for the month of April is 56,000. Of course, yes, because cash collection is, I picked it up from here, and that is 56,000. This is the total availability, sum of both. Disbursements for inventory, I paid 47,850 right here. Then there is something called expenses. Let us look at what is this expenses. You can see this. Let us read this. Monthly expenses are as follows. Commission 12% on sales, 12% on 60,000 plus 2,500 monthly rent plus 6% on sale, other expenditures, that is excluding depreciation. So, all these things put together, let's add that out here. I'll just verify it. What is the sale? 60,000 is the sale out there into 0.12. That is what we see as the first tranche of expense in the form of commission plus 2,500 plus another 60,000 into 0.06, that is basically for other expenses. Sir, you have not included depreciation. Yes, I have not included depreciation because depreciation is a non-cash expenditure. Here we are preparing cash budget out there. So, that's all. So, that is 13,300 and that's what they had basically got out there. Next it says, equipment costing 1,500 was purchased in the month of April. Yes, equipment costing 1,500 is purchased. What is the total cash disbursement? That is sum of all these three put together. Let us look at sum of all these three put together. This is the sum of all these three put together. So, what do you call it as the net? What is the cash balance or excess of this excess of cash after disbursements is 1350. How do we get it? That is 64,000 minus this 62,650 is 1350. Does it end here? No, there is an interesting piece of information after that. You read the last part here, the last paragraph out here, point number H. Management would like to maintain a minimum cash balance of 4,000 at the end of each month. The company is in agreement with a local bank and that allows the company to borrow in increments of 1,000 at the beginning of each month, up to a total balance of 20,000. Interest rate per month on the loans is 1%, and for simplicity we assume interest is not compounded, and it will be the company would as far as it's able repay the loan plus accumulated interest at the end of the quarter. So, you need 4,000 loan or 4,000 cash balance, but you have how much? Only 1,350. You can borrow only in multiples of 1,000. So, what happens? Now, bank borrowing in the month of April. What is the borrowing you will have to have? You will have to have a borrowing of 3,000. Because you can borrow multiples of 1,000 and totally you need to have about 1,350 out here. So, what is the total? That is balance at the end of the month. End of the month is obviously sum of these two, 4,350. What happens to this balance? This balance will become the opening balance for the month of May. This is the opening balance for the month of May. Now, what is the cash collection in the month of May? Let us look at the cash collection for the month of May. Is cash collection for the month of May is 67,200? Yes, cash collection. So, total cash available for the month of May, this is the total cash available. Disbursements, let's go. How much are you paying for your purchases out there? This is what I am paying for my purchases. How much am I paying for my expenditure? Let us look at what is the sales. 72,000 is the sales into 0.12 because 12% for commission plus 2,500 for rent plus what do you call it as 72,000 into 0.06, that is for other expenditure out there. No depreciation. So, this is the amount what you will have. Equipment, you are not buying any equipment out here. What is the total cash disbursement you have in the month of May? This is the total cash disbursement I have in the month of May. What is the cash balance you are going to have? The cash balance you are going to have is basically going to be negative 2410 out there. That means, can I have a negative cash balance? No, you will not have a negative cash balance. That is where they say, I borrow right in the beginning of the month itself. How much you would have borrowed in the beginning of the month? I need to maintain a balance of 4,000 minimum. I am already down by 2,500 or 2,410. So, I need to borrow roughly about $7,000 or 7,000 rupees so that my what do you call it as my balance is about 4,590. So, I need to borrow about roughly 7,000 out there from the bank. I am borrowing at the beginning. So, in virtually you will not have a negative balance. This is only for calculation. In reality, you will not have negative balance because you would have borrowed the 7,000 on the first of the month itself. So, you will have a balance of 4,590. Sir, how will I know? That is where budget helps. You have a budget. So, based on the budget, you go ahead and borrow in the beginning of the month. Now, I have budgeted. Now, I am expecting loss. So, because I am expecting negative cash balance, I would have borrowed on the month of on the 1st of May itself. Now, I go on. What is the cash balance in the month of June? Beginning cash balance. Ending cash balance of May. That is the beginning cash balance of June. What are the cash collections in June? Cash collections in June is, this is the cash collections in June. What is the total cash available? The total cash available is this, the total cash available. Now, what is the cash disbursement? This is the kind of disbursement I basically have for this. What is the kind of expenditure? What is the sale in the month of June? 90,000 into 0.12, that is for commission, plus 2,500 for rent, plus another 90,000 into 0.06, that is I could have done out here. Equipment purchase 0. What are the total cash disbursements? Sum of these three. So, what is the cash balance I am going to have in the month of June? The cash balance I am going to have is, I have $15,000 as cash balance out there, 15,000 rupees as cash balance. So, do I have to borrow? Now, I do not have to borrow. Number one, I am going to introduce one more row out here. Yeah. So, what happens? Excess of cash is 15,140. First thing, what will it say? It says the company as far as possible would repay the loan. So, you will repay, first point, I will repay the loan out there. Repay the loan, that means money going out. How much I have to repay? 7 plus, what do you call it as 7,000 plus 3,000. Minus 7,000 minus 3,000 out there. So, I will repay 10,000 rupees. I have repaid. Next, what happens? After repayment of loan, I have to pay interest. What is the interest? On this $3,000, what I have borrowed, I have to pay 1% for 3 months out there. I have to pay 1% for 3 months because I have borrowed for 3 months. Beginning of April, I borrowed in the beginning of April, I have to pay 1% for 3 months out there. Next, on this 7,000, what I borrowed, I have to pay 1% for basically 2 months out there, because I am borrowing again in the beginning of this month out there. I am borrowing in the beginning of this month out here. So what is my total interest payment? 230. So what happens? Why I said interest? Beginning of the month. So first say 3,000 you have borrowed on 1st of April. So May, April 1st, May, April, whole of April, whole of May, whole of June you pay. 7,000 you have borrowed on 1st of May, May and June you pay. So that is where 230 is in interest. So what is your cash balance? What is your ending cash balance? What you will have? This is the balance what I had, excess of cash and after disbursements. I repay the loan of 10,000. Because it already has a negative sign. I repay the loan of 10,000. I pay an interest of 230 and I will have about 4,910 as the cash balance with me. Now let me prepare what we call it as the typical income statement in this particular case, and then the balance sheet out there as they have asked you. Let us look at, first of all, let us say sales for the quarter. What is the sales for the quarter? It basically, if I go back out here, what is the sales for the quarter out there? They have given sales for the quarter is 60,000 plus 72,000 plus 90,000. This is the sales for the quarter. What you have, 2,22,000 out here. I am just going to move this to the other other column out there. I am just moving it. Then let us look at COGS, cost of goods sold. What is the COGS? That is, when I say COGS, beginning inventory. What is the beginning inventory I had? The beginning inventory I had is about 36,000. So beginning inventory. Then what is it? We have to make out what is the purchases for the quarter. What are the purchases for the quarter? Let's go back. This is the percentage purchase by that. This is the required purchase. This is the purchase for the quarter. So what is the amount of goods available? The amount of goods available, that is inventory available for the quarter. Now less ending inventory. What is the ending inventory out there? The ending inventory is your desired ending inventory out here. So what happens now? COGS utilized. COGS utilized in this particular case is, what is this minus this out here? This is the COGS utilized, that is 1,65,000. What we call it as 500 in this particular case, as we can see out here. So what is my gross margin? My gross margin is this minus this is my gross margin out here, my gross margin. Next, I will get into selling and admin expenses, which is at 12% of sales. We have it calculated already. That is, for expenses, we have it calculated. This plus this one plus this one out here. Yes. Then I have depreciation. It says 900. I'll just check out. It says 900 per month depreciation. So 900 into 3. Depreciation also done. Selling admin expenditure at 12% of sales plus rent. I'm going to look at plus rent. 12 selling and admin expenditure and rent. Let us look at everything put together. And rent out there, because I've added everything. It's not 12, it is 18% on rent. So that is all. I've basically taken that into consideration out there. So what's the total of the other expenditure out here? If the total of the other expenditure out here in this particular case is this plus this out here, this is all 50,163. So what is your net operating income? My net operating income in this particular case, net operating income is 5,340 less my financing cost that is interest. How much is the interest? 230, right there we pick up. So what is your net profit out there? That is your, what do you call it as, net income is 5,110 is all what we have there. Next we do what is called as the balance sheet as of June 30. Sorry. Balance sheet as of June 30. Let us look at the balance sheet as of June 30 out there. Let me start with the assets. Let's go here. Cash. What is the cash balance you have? The cash balance what I have at the end of the quarter is right here for 910. What is the accounts receivable? What is the accounts receivable? It says that 40% are credit sales, and credit sales are collected in the following month of purchase. So whatever is the month sales of June, 40% of it is my credit sale out there. Next, what is my inventory? Inventory, we just looked at ending inventory right here. This is my ending inventory. Then I have building equipment, etc. What is the value of the building and equipment as per the balance sheet? 1,20,000 minus the depreciation part of it. That is what is the value of the building and equipment out there. Is this all? No, there is one small issue. Please understand, you bought one more equipment out here for 1,500. So what happens? I will add that equipment which you purchase also, where that equipment is added between these 3 months. So that is what, then what happens? Your building is so much. So what is your total of your assets? Total of my assets is, this is the total of my assets out there. My total of my, my total of my assets is going to be 1,88,510. Let us look at liability and stockholders equity out there. Let me go from this. Accounts payable. What is the accounts payable? It says that one half of the inventory purchase is paid for in the month of purchase. The other half is paid in the following month. So what is the purchase that you are making in the month of June? 43,200 is the required purchase what you are making. 50% of it you are going to pay in the month of June. 50% of it you are going to pay in subsequently. So now the accounts payable in this particular case is basically 50% of this purchase is the accounts payable. What is my common stock after that? The common stock. Common stock in this case is 1,50,000. Yes. Then what is the retained earnings? My retained earnings is 12,250 plus the net income of this quarter. So it's going to be this much. So as you can see, the balance sheet balances. Thank you. We move to the next phase, that is what we call it as the flexible budget out there.